Came up from the gutter, now I trade that gold. Back in the 80s, story gotta be told. Got my P&L popping, charts on the rise. FOMO in it.
Good morning on the Sunday. That was me swimming a couple of hours earlier at the beach, going under, so to speak. And let's hope that these markets aren't going under. Although I think some of them we want to go down a little bit. So let's have a look at some of these markets, and let's start with the currencies. Now, I want to have a look at the dollar index, and essentially we're short the dollar. We may be premature on this, I'm not too sure. And we'll find out soon enough, because we've now made a peak on the dollar. We've come down, made a newer low compared to this previous swing low. And we're now rallying up, and we've come up to the 61.8% Fibonacci of the move from that high down to this low. I want to point out one thing which I did in the live stream on Friday or Thursday. I can't remember when it was now. I think it was Friday. We're forming a very similar fractal to what we had on the previous visit to this area at around 108, 109. And look at the way this fractal behaved. I'm not saying this is predicting what's going to happen, but it's something that could happen. And we had a rally, a sort of a staggered rally. We made a high, came back down, got back up again, came up to the 61.8% Fibonacci, and then moved down. And you can see we're doing a very, very similar thing at the same level on the chart. So as long as that pattern's not broken, I think we could see some further downside on the dollar index, and that will pull the euro and the pound up and the dollar yen down. So perhaps we can see a repeat of this and a double top over there. And it's beginning to look, if this does follow suit, it's beginning to look very much like we're trading in a range on the dollar, and that we could be stuck in this range for some time to come. I don't expect any dramatic fall-offs in the dollar, and I don't expect any dramatic rallies. So perhaps that's our range. It's a 2 or 3 year range, and perhaps that's what we're destined to trade within for some time to come. I don't think there are any market stimuli for a dramatic collapse or rally in the dollar. And in fact, if anything, I think the current economic and political events are probably more supportive of the dollar than they would have been otherwise. So with that in mind, we're still long on the euro, and we just tried to make a turn on Friday, not much of a turn, but holding above this support level. And it's important to look at the very, very long-term view on the euro, and I want to point this out to you, which I have done before, the 12-month chart. What we have here is almost a quadruple or 5 bottom pattern. We've got 3 there, maybe it's even 6. 3 there, but 2 at this precise level, and then 1 spike down. This one tried to get there, not quite. And then this current year, 2024, each candle represents a year here, has stopped at this level too, precisely that level at 1.0305 actually. So going back to the day chart, you can see we're trying to form a bottom here. This has retraced 61.8% of the move up. We're still below the 20-day moving average. We formed an inverse hammer candle pattern on Thursday, and then Friday, just, if anything, a bullish engulfing candle, but really not much. A bit of a wick high, tiny wick low. So pretty undecided at the moment. We're also long on the pound. This one's looking decidedly worse, to be honest. The other one I want to look at is the Swiss franc as well. Surprisingly, been pretty weak against the US dollar. Now here's the pound coming down hard on that trend line, very long-term trend line. You can see we've tested it 1, 2, 3, 4. This is the 5th occasion. And we did bounce off there quite convincingly and vigorously, but now coming back perhaps for the retest. So the bounce, retest, and continuation. It's a big order block here too. Until this level down here is invalidated, in which case I'll hedge this trade. The euro will probably follow suit. Might be hedging both of them at this rate. But until that happens, we're going to remain long on the euro and the pound. We're also short on the dollar yen. This is another one. Let's go to the day chart actually. Another one that's been frustrating. But I think a little bit too much talk about the carry trade unwinding for the second time. Too much excitement about all of that probably, and the market's just done the opposite to that. However, we are short from these 2 positions here. We've taken some profit on the down moves previously. We're now short again. And we've broken up through the short-term downward trend line and all the moving averages. That was on Friday, actually, quite a convincing breakout. And so we may have to revisit this top here again, where the apex of this triangle is, this order block and this previous swing high. That's around about 156. We're currently trading at 153. I don't think we'll get any higher than that, 156 or so, maybe 157 on first attempt. So if we do move up into this order block and underneath these trend lines, I'll look to add another short tranche, but be willing to hedge it very readily once we break up above there, looking for a move all the way back up to 161. So tricky days indeed, and I don't think we should be betting against the dollar too much, although I think we could see this range. As I said, we're at the top of the range now. Maybe we've got to go back down to the bottom. Just looking at the 4-hour charts across the top here, no real signs of anything apart from the euro trying to sort of curl up, pound still looking weak, and the dollar yen still looking pretty strong. So until we move out of these current zones, there's not much else to be said on there. Now let's have a look at the stock markets. We're short on the NASDAQ and the S&P. Nothing's changed since all of my videos last week in the live stream, so I don't want to repeat that too much. I do want to say, however, we did reach my blob on the NASDAQ and we rejected from there. Now, we didn't quite reach the underside of this trend line, but we got into the blob for what that's worth. Made a spike high, a doji, not quite a reversal candle. One spike doesn't make a reversal, but one spike certainly gives you an idea that we might be trying to reverse here. We want to see confirmation of that with a move down, or maybe a double top there or something like that, a tweezer top. We'll be looking for that very closely. But we are short already, and we're short from pretty close to the top of the spike. So let's see how we go on the NASDAQ. I think we could see a 10 to 15% correction. I'm not sure if that's going to happen this year. I think we may have to wait until January, maybe even late January before that happens. The S&P, on the other hand, does look a little weaker. And in fact, we didn't even get up to those areas. Remember, I pointed out in the live stream and in the video on Thursday that we should try and reach up into that area, even though we are short. We're short on the NASDAQ too. We haven't got there, and we're turning down. So pretty much from where we got into this trade, which would be good news if this moved down from here. We're above the 20-day moving average. We're above the 50, the 100, the 200. So a long way to go. If we could get down to the 50 or the 100, just for a mean reversion trade, perhaps down to 5,600 or so, that'd be great. This doesn't look incredibly bearish to me. Doesn't look like a very clear top forming, just more of a tiny little camel hump, if anything. We're short on the German 30, very similar pattern to that, almost reaching the trend line too, but not quite. And you can see this long-term sort of top trend line. And we didn't quite get there, but we are short on this one as well. So in fact, we have our largest short position on the German 30. There's a couple of reasons for that related to currencies and the economy in the Eurozone in comparison to the US. So in general, I think maybe if there's going to be any strength in any of the stock markets, it's probably more likely to be the US and maybe even the Chinese market, but maybe not so much the European market. So we'll see how we go. We're fully hedged on Tesla. We were short. We hedged the moment we broke up through there. Same thing on Apple, hedged, fully hedged. So until these move out of their ranges, form a massive top or something like that. I don't know, we've got green space above us on Tesla. It is at an all-time high. And Apple, on the other hand, trying to maybe form a top here, I don't know. Also at an all-time high, not looking terribly overstretched actually, and I think the top Bollinger Band's way above us. How far we could get on this, I don't know. We'd probably be aiming for the round numbers, maybe 250 to start with, then 260, and even the half rounds, 255, 265, and so on. I don't know which way this is going to go. It's looking a little bit weaker than Tesla, but we're going to remain hedged on that until we see some evidence one way or the other. MSTR, looking to sell. Actually, I mentioned this to my private group on Friday. If we can get back up into these areas, I don't think this high is going to be broken anytime soon. So if we can get up to some of the Fibonacci retracement levels, I've got the broader Fibonacci on here. Let's put the one from the top down to the bottom. Just move that red arrow out of the way. And let's draw that fib in. So I think that if we can get up to like 465 and maybe even 500, so the 618 or the 786 fib, I'll be looking to sell quite vigorously at that point. And perhaps that's when Bitcoin starts moving down too. So watch those areas, 465, 500 to sell MSTR if we should get there. We may not even get back up there. We had a fantastic trade, one of the best trades I've taken in a couple of years now. Let's just move this all back into place so that it's all neat and tidy when I come back here. IWM, we were short, we're not in that anymore. And NVIDIA, we were short, we're not in that anymore. Let's go across and have a look at crypto and gold. Gold fell off a bit on Friday, reacting to that double top area that I pointed out with a blob. I love my blobs. And we reject from there perfectly, forming a precise double top, breaking back down through the trend line with a bearish engulfing candle, and now a second bearish candle. This is the day chart, and this candle's taken us below the 50 and below the 20. My outlook for gold remains relatively bullish, but I think we need a decent pullback, and I think we could get back down to this first trend line. Notice that we've broken down through already and now closed again below the steeper trend line. So I'm looking for a move back down to the trend line with a shallower gradient, that's this one here, and we could get down to the Fibonacci retracement level, the 618, and also the 200 period moving average right down here. It's also a nice flat top breakout zone, so anything in this area around 2450, 22480, something like that, I think we'll probably break that low there, make a new low, and then carry on up. Allow for a move back down into this next order block at about 2.3, and don't be surprised if we should get a sudden spike down there too. I'm fully hedged on gold now. We were long, and we got long over there. And I've taken a hedge position here, short, and so we're fully hedged on that. I just locked in that profit. I don't know which way that one's going to go. We're long on Bitcoin still. We've been buying all of the dips, and well, we've been long since around about 49,000. So we're at 102 now, looking pretty good. And I think we could actually get a final burst on Bitcoin up to 120, 130, maybe 140, maybe much more than that. I don't expect that, but you never know with Bitcoin. And so I'm looking to hold on to this long position. I'll also consider adding some more if we break and close above 104,000. And I'm willing to hold this position until or unless we close and break down and close beneath this short-term trend line, the 20-period moving average, and then this red line. Although I do expect Bitcoin could move up to 120 to 140 and perhaps higher, I'm under no illusion that this could suddenly plunge down and start a trend reversal and see us moving much, much lower. Perhaps down into the... All right, so my camera just stopped working, but now we're back. All right, so that's my view on Bitcoin. If we do drop down, I think we could get down to 70, 80, 75, maybe even to the high 60s. So be very careful of that, be very aware of it. And don't FOMO into this, and don't be a hodler dime in hand if that's not the right play. I have the same sort of view on Ethereum. I think this will follow suit. Perhaps do a little catch up. Check my last video. I did some analysis on Ethereum. And then Palladium and Platinum, I'll link the last video up on this one as well. We're trying to form a bottom. Not sure if we will here. It's looking precarious. Very weird shape here. Actually, now we're starting to form a bit of a funnel shape here on Palladium on the daily chart. A flat top and a falling bottom. As I said on this, we probably got some sort of options block, market maker, big player blocking this top off here. And if and when we spike down and break up through there, it should be pretty vigorous and we should get going quite quickly. Do allow for a sudden spike down here, down to about 900 on Palladium, just towards these two swing lows here. And at the extreme, we may have to revisit these smiley top blob bottoms. But we'll be hedged long before we get there. If we have to move down to that area, we'll obviously hedge our position. Same with Platinum, also just sort of breaking down through this descending triangle, which I pointed out in the last video. And we may have to spike down to also 900 on Platinum. So very interesting pricing. We've got a potential to reach 900 here. We're trading at 950. Here we're trading at 920. And the bottom for each one of these is just above 900. If we should spike down there and then recover. We may spike down there and not recover. So we're watching these quite closely and being quite disappointing really, but some strange patterns on Palladium. This descending triangle, which may be just a fake out on Platinum. So we'll see how we go. All right, going across to energies, you'll know that we shorted natural gas. Let's have a look at this on my Black Bull broker. This is the Henry Hub futures price. We shorted it for a couple of reasons. First of all, we got into the order block. Secondly, it's very expensive. Thirdly, we had a reversal pattern on the 4-hour chart and on the hour chart, and we're now moving down. So it's pretty expensive up here. This is what I think we could get, and actually I'm hoping for, apart from making some money on the short position that we're in. But if this carries on moving down, I think we may retest the top of this breakout of the triangle and probably a fake out through the top of the triangle down towards the bottom of the rising part of the triangle into the apex where my original blob was. We never quite got there, and maybe it's now the opportunity to do so. So we got short around about $3.50. I'll be looking to exit this trade probably around $3 and then look to only buy once we get into like 270, 280, somewhere around there, looking very closely for reversal patterns on the 4-hour, the 1-hour chart if necessary, but that's the general overall plan. Short at $3.50, out at $3, and then looking to rebuy either at $3, but probably slightly lower, or maybe at $3 and allowing for a slightly lower move down to 2.7, 2.8, where we can add some more positions on that. So we'll see how we approach it. Depends on the sort of angle of attack, so to speak, and the momentum of approach down towards that level if we should go down there. But so far on the day chart, looking good. Going back to the 4-hour chart, you can see basically we finished at the low on Friday, so pretty bearish still. Let's see what happens this weekend. Maybe we'll get a gap up or a gap down. If we gap down, that'll be great. If we gap up, we've still got plenty of space between us and our entry point, depending on the size of the gap, of course. Right, we're also short on WTI. We're not trading Brent crude. We're short on WTI oil. And I was asked a lot on Friday about whether I'm concerned about this getting up and closing above the 50-day moving average. I'm not. And we've been selling on each one of these pumps or rips or rallies, whatever you call them, and we've done the same again here at the 50. Always allowing for a continuation up slightly higher than expected. So we've got these swing highs up here, which are good resistance, and the 100 period moving average on the day chart. And we've got the 200 up here, probably a better resistance, and it may meet this green line by the time we get there. So $75, maybe. We might have to add there. We're currently trading at 70, and we've been shorting all the way down here. In fact, we started shorting on this move down right at the beginning of the year in April 2024. So that's generally been the play. I think we could get down to the low 60s, and then we might have to stop there. Let's quickly look at the chart. I'm going to switch it to a weekly chart just to make it easier to see. So there's the low 60s down here at the bottom of this order block, these two swing lows. Let's have a look further down, and we could actually reach down to $61, $62 per barrel. That's the bottom of this range. We've also got this channel marked out in red lines that we might have to reach the bottom of, and that would take us below $60 and probably into the high 50s, somewhere around 55 to 58, something like that. So that's the strategy on oil. And then natural gas, as you know, we're short. We're short on both of these at the same time. We're normally long one, short the other. They often trade in different directions, and being short on both of them simultaneously simply means that we've got a sort of a hedge on here, which means there's some uncertainty and some doubt as to which one of these is going to get a bid and which one of these is going to get an ask or a sell. So we'll find out soon enough, but so far we're in the right direction on both of them, both short. Okay, let's have a look at the softs and the grains. Really not a lot to add again. We did cover this in some detail on Friday in the live stream. We're long on sugar, we're short on cocoa. Once again, if you want to see what I think about on cocoa, have a look at Friday's live stream where we covered this in some detail. Basically, we're 50% hedged, looking for a turnaround somewhere near the top of this range. Don't rule out a sudden spike through here. We've already moved slightly higher, actually fractionally higher to a brand new high here. So don't rule out a spike, but equally as much, don't rule out a gap down on Monday and an open much lower than where we closed on Friday after making that little spike high through the top, which will have maybe stopped out a few hands and liberated some space for a move down. We're also short on coffee. I covered all of these actually in quite some detail on Friday. So please do have a look at that link, which I'll link right now above us. And it's also linked at the end of the video. So you can go and have a look at that. We're also long on soya, we're long on wheat, we're short on orange juice, and we're long on cotton. Essentially, we're long on the staples and short on some of the luxuries. And then going across to this screen, I'm not going to talk about the rand pairs today. We're still short on the dollar rand. Having a look at VIX, I think people got way too excited about buying this VIX contract. I think we might have some time to go. Depends what these markets do. They aren't showing any signs of dramatic topping. Not a lot of movement in the options market just yet. So I think the VIX will just dawdle and dribble and bounce and bobble along the bottom here for a little bit longer until those markets start to collapse. I don't think that that's going to happen just before Christmas. So expect another few weeks of the VIX bumping around the bottom there. And then TLT, very, very confusing for not only me, but many, many players in the market. The bond yields, the bond rates, the inversions of the 10 and the 2 and the 5 and the 20, all of those calculations furiously going on as we see TLT just simply collapsing. 4 big bear days in a row with gaps in between on top of it, actually 5 in a row, each one gapping further down. So quite a move there, and whether we'll see this bounce up or not, that's for a whole discussion on the the short term, the 2, 5, 10, 20-year yields and where we're going on all of that. As I said in my last video, I'm getting pretty bored of this one now. We had some hope. We got a bit of a bounce out of the blob. We got long there and long there. One position's now out of the money. One position's barely in the money. And so it's getting a little bit boring. And this stark momentum downwards is a little bit startling. So we'll see how we go. All right, that's it, folks, I think. And just going back to Bitcoin, because it's the only live chart, and just holding up there nicely at $102,000 per Bitcoin, and hoping for this to break out through the top. Is an ascending triangle, by the way, and it's angling up. It all looks quite bullish, so if you are long, we haven't seen any movement this weekend, which is good. No dramatic thin market manipulation, which is great news. And it's becoming more and more difficult to manipulate this market as the market cap rises, and the ETFs and the hedge funds and people that make money out of us losing money pile in to the ETFs. So getting a lot more difficult for thin market movements and dramatic volatility on the off times. And I think we'll see Bitcoin over generally over time start to become less volatile and more stable. And actually, I was watching a show this morning about Bitcoin and gold, and many more people on the David Lynn show, which I highly recommend, by the way. David Lynn, fantastic show, most days on YouTube for free. But they had a gold guy on there talking about gold and Bitcoin. And even the gold guy was saying that Bitcoin may now be considered by some to be a competitor to gold in terms of stability, a store of wealth, maybe not as a currency, but as a hedge for sure. So we'll see how Bitcoin plays out over the coming years. I do think we could get up to 120, 140, and then I think we'll probably have to come all the way back down to about 70 or 80 after that. Okay, folks, have a great weekend. If you did enjoy this, please like and subscribe. It really helps the channel. And look out for my next videos next week. I'll see you as we approach the final week before Christmas. Markets get thin, but not dramatically violent. And you'll probably see a continuation in most markets, just a continuation in the current direction, bit by bit, gradual, melt up or melt down gently. So don't expect too much of a wild ride going into Christmas. Take care. I'll speak to you soon.
Charts on flames, data be the dice man. CME floor, wristwatch precise fam. Market play got the NATGAS surge. Fingers on the trigger, yo, time to splurge. Downtown hustle, suit game clean. Vibes electric, screen buzz mean. Neon lights reflect my winning streak. Move so sharp, stand tall, don't blink. Hit the bid, don't miss the rate jump. NATGAS flow, make your pockets thump. Price spike, catch the wave to the top.